Eric Balchunas did this, right? He actually said, okay, there's $30 trillion of assets that right now are prohibited from investing in Bitcoin, right? The firms have said, the RIA firms said, nope, can't own it. When there's a BlackRock ETF, they're going to have to. Let's say it's a 0.1% allocation. That's $30 billion. Well, but Mark, 30 billion on 500 billion isn't that much. Well, but 500 billion doesn't trade. It's about 100 billion that really trades, and it's even smaller than that on a daily basis. 30 billion will move the price. We saw that on Monday.
Over the past few months since BlackRock applied for a spot Bitcoin exchange-traded fund in June, there's been a host of bullish sentiments about how such a product could encourage more institutional investment in cryptocurrencies. At the moment, thousands of institutional investors managing trillions of dollars in the United States are unable to directly invest in cryptocurrencies like Bitcoin as a result of the stifling regulatory environment. Then in comes BlackRock, the world's largest asset manager with $9.42 trillion in assets under management as of June 30, 2023. In addition to being such a huge Wall Street giant, BlackRock has a lot of influence in Washington, especially evidenced by its 575-to-1 exchange-traded fund approval rate. Another interesting thing most prominent crypto investors and analysts quickly pointed out after BlackRock's announcement was the timing of the application. It probably could not have been more perfect. One, Bitcoin and the entire cryptocurrency market have now been through different market conditions, so investors no longer have questions about whether the industry is here to stay or not. Two, there is a lot of institutional interest now that we are past what Mark Yusko describes as the then they laugh at you phase. This is no longer magic internet money, it's as real as it gets. Last, but definitely not least, we are on the verge of a massive Fed pivot that will send asset prices soaring. More cowbell, more currency debasement, and more urgent diversification into hard assets. According to Mark, a renowned hedge fund manager and the founder of Morgan Creek Capital Investments, it's a foregone conclusion that BlackRock's application will be approved by the U.S. Securities and Exchange Commission, and with that approval, at least $30 billion will pour into the cryptocurrency industry in no time. During the latest episode of Mark's weekly roundup with Blockworks Macro, the renowned hedge fund manager and crypto enthusiast reacts to Cointelegraph's hasty and now retracted Bitcoin ETF approval news. Mark believes the report was not false, just too early. When the real thing does come, the Morgan Creek Capital CIO and managing director predicts that we could get up to $300 billion in new investments in Bitcoin. Before we bring you clips from this fascinating discussion between Mark and Blockworks' Mike Ippolito, please take a little time to like this video, subscribe to the channel, and don't forget to drop your comments in the comments section below. Thanks and enjoy.
I retweeted, but I said, this may not be true, okay? But if it is, I told you. Because look, BlackRock is going to be approved. They are going to be approved first. I still believe they're going to be approved only BlackRock. People push back on that one, but and a couple others did say, well, there's no source. It's likely untrue. But the reality is, the reaction to that news is totally legit. I mean, in the sense of, yeah, when this is approved, there's going to be increased demand, and it's not if, it's when. So when this is approved, there's going to be increased demand, a lot of increased demand, and prices are going to rise. And yet here we are on Friday, recording this on Friday, and prices back up a little higher than where it was. So people have been saying, you know what, it's coming. And I think that's really interesting.
Yeah. This is a perennial question within crypto. Is this priced in or is it not priced in?
In the 20s, in the 1920s, in the roaring 20s, stuff was not priced into equities. There was lots of manipulation. There was lots of scams. There was lots of big movements on little things. And then that changed a little bit. And then by the 70s and 80s, there were still, things that weren't priced in the sense that you had message boards. I love message boards, and the whole famous thing of Michael Saylor's MicroStrategy was totally manipulated, right? From $3 to $330 back to $3, all by these message boards. I mean, he got fined, people got fined. I think some kid might have gone to jail. I can't remember, but I mean, so markets mature and media coverage matures and the quality of analysis. Now that, and again, it's not poking anybody in particular, but the quality of analysis in our space, in fact, if I claim to be part of the digital asset space or the crypto space, it's still working itself to a level of high quality. There are some great organizations, there's some great research organizations, but by and large, stuff gets thrown out there, like what happened on Monday, right? So you were telling me before we got going that I thought the whole thing about the intern was a joke, right? I thought they were saying, oh, it was an intern. Well, I guess it was an intern that, read something on a chat group or a chat room and posted it with no source. That's not what media does, right? Media has to have a source. And then people just fly into it and say, oh, okay, I got to buy. Well, where's the analysis of, well, what does this mean? Eric Balchunas did this, right? He actually said, okay, there's $30 trillion of assets that right now are prohibited from investing in Bitcoin, right? The firms have said, the RIA firms said, nope, can't own it. When there's a BlackRock ETF, they're going to have to let people own it. They're going to have to let their customers buy it. So let's say it's a 0.1% allocation. That's $30 billion. Well, but Mark, 30 billion on 500 billion isn't that much. Well, but 500 billion doesn't trade. It's about 100 billion that really trades, and it's even smaller than that on a daily basis. 30 billion will move the price. We saw that on Monday. But what if it's 1% allocation, which would be a prudent allocation, which people have. There are a lot of people that have 1%, 2%, 3%. Some have lots more, but a prudent allocation would be a 1% position, like a gold at 2 or 3 or 4%. So that's 300 billion. 300 billion on a $500 billion asset. And that ain't priced in. That is, I'm on the record, that is not priced in.
Whether an approval is priced in or not has been the topic of several heated debates in the past few weeks. According to some sources, Monday's rapid, though short-lived reaction is enough evidence that it's not priced in. However, Joe Consorti and Nick Baccia, authors of the Bitcoin Layer newsletter, hold a slightly different view. Joe and Nick have described Monday's pump as measly and a total run of the mill intraday price increase for Bitcoin. According to them, Monday's price action indicates that much of the fanfare and price gains of spot ETF approval is baked into Bitcoin's price already. They added that Bitcoin remains a risk asset, and with an expected economic downturn next year, there won't be a massive flow of capital into a spot exchange-traded fund. However, Alex Kruger, co-founder of Asgard Markets, an investment research firm, noted that Monday's price action clearly proves that nothing is baked into Bitcoin's current price. His post reads, "Whoever thinks the ETF is already priced in has just been proven wrong. Expect a plus 20% day move when approved." Let's get back to Mark as he speaks further about Bitcoin and the overall U.S. economy.
In real media, Larry Fink, right, the president of BlackRock, went on CNBC. I guess some people don't call CNBC real TV, but I think it's real TV. And in the afternoon on Monday, and basically said, rumor, not fact. We haven't been approved. We're still making. In fact, 2 days later, it was reported that they had made the comments back to the SEC because October 17th, Tuesday, was the day on which either it had to be approved or they had to say, hey, you have to give us more and there's another 90 days. So that clearly happened. But Larry came on TV and said, amongst other things, well, really, things are pretty tough out there and people are afraid. And so there's a flight to quality in treasuries, gold, and crypto, which Bitcoin, crypto, people get mad, but Bitcoin is a cryptocurrency. I mean, it just is. But and there's he means Bitcoin, not crypto. Whatever. Yes, his application is for Bitcoin. Maybe he's not allowed to say the word Bitcoin because he's in the app. I don't know. I don't think he really doesn't understand. He's a pretty smart guy. but it is demand for other cryptocurrencies as well. But bottom line is Bitcoin is the safe haven. Other things are, you can argue whether other things are good, bad, or indifferent, but Bitcoin is digital gold. There's this conundrum, right, where things look pretty good from an economic perspective. If you look at the economic data, we had 2% growth. Now they're saying we're going to have 5% growth. Now the retail sales thing, part of that was just oil prices went back up and gas prices went back up, and a big chunk is gasoline. Okay, fine. That's not going to play well for the next election, by the way. If oil prices are over 100 and gasoline prices get back to $4 at the pump, so expect something. And the debt is a number that's incomprehensible at 33.5 trillion with a T. Okay. So that drawdown is the percentage drawdown. That isn't the actual drawdown. That actual drawdown, orders of magnitude. But now you got to inflation adjust. Fine. But I'm willing to go on the record, probably without doing the math, not probably without doing the math, but I'm probably right. That this is bigger, even inflation adjusted, like orders of magnitude bigger. And it's just because the law of large numbers and the decimation in places that have not bubbled to the surface yet. I mean, I just terrible.
So
terrible.
Where do you think those places are?
Regional banks. There's a whole bunch of banks that are insolvent right now. Completely, totally insolvent. I mean, done, board them up, distribute what's left. But there's this government program that says, no, you're fine. You're fine. We'll buy them all. But you don't have the money. Well, we'll just make it. Well, if you make it, then what happens to the rest of the money? Well, we'll worry about that later. But banks definitely. Companies, there's a whole bunch of companies that borrowed at really low rates and levered the crap out of that's a technical term, out of their balance sheets.
Basically, everyone seems to be jumping on the Bitcoin ETF bandwagon, including JP Morgan, the nation's largest bank by assets. According to recent reports, JP Morgan and Bloomberg analysts recently predicted that the SEC would approve a Bitcoin exchange-traded fund before January 10, 2024. Meanwhile, data analytics firm CryptoQuant is predicting a 50% increase in Bitcoin's market cap should the spot ETF be approved. According to a recent report from the firm, Bitcoin will become a $900 billion asset, and the total crypto market will grow by $1 trillion. The firm further noted that if the issuers that have applied to list Bitcoin ETF put in 1% of their assets under management, about $155 billion of fresh investments will be entering the cryptocurrency industry. Do you agree that billions of dollars will enter the crypto ecosystem after the approval, or are you feeling more cautious as a result of current macro conditions? Please drop your comments in the comments section below. Also, ensure you smash the like button, subscribe, and turn on post notifications for more videos. Thanks for watching.